Obviously, it's Start Engine. We're all about the crowd, but I think these institutional investors aren't going to be going anywhere. And obviously, on a day like this, it's kind of important to think about what institutional investors are looking at when they're considering crypto-related investments. How do they separate the blockchain blockbusters from the you-know-what coins? So our next panel will be tackling this topic, and moderating will be Miko Matsumura, a co-founder of Evercoin Exchange and general partner at Gumi Ventures. With 25 years of experience as a Silicon Valley operations executive, he's raised over $50 million in venture capital for open source projects, as well as $250 million in ICO capital. So would you all please join me in giving him a very warm welcome, along with the rest of our panelists.
Okay. All right, let's get started. It's a 30-minute panel, so we got to keep things crisp and fast. So this is Arianna, Peter, Sunny. You guys can Google. Let's get started. So for me, first thing I want to address is winter, nuclear winter, or ice age. Go.
Winter.
Winter, say more.
Well,
not too much more.
Okay. I think after, for the folks who are in the industry in the winter of 2014, 2015, this feels very mild in the sense that even though prices are down significantly, I think there's been so much positive news over the last couple months. And there's not, I think, the risk of the industry going away like you really felt at that point in time.
So deploying capital. You're deploying capital. Peter?
I would say winter as well. There is so much more infrastructure now than before. I'm particularly interested in the news that Fidelity launched a Fidelity Digital Asset Management division to do custody. And I think custody is one of the big drivers of institutional money getting into the game. So I think that's a very promising sign.
Awesome. And then Sunny.
Consumer winter, but I think from those of us on the institutional side, it's starting to look a lot more like spring. Further to the point of custody, Goldman investing in BitGo, which just gives further validity to institutional capital coming in, and I think more smart money coming in, which is good, and deploying capital.
That's fantastic. So we're kind of, so I really want to go to Peter quickly because you've dumped the ICO. So tell me a little bit, just real quick, about like your switch.
Yeah, absolutely. So last year we were focused on investing in digital assets, mostly in ICO projects because they were the best risk-adjusted bet in the industry. We invested in blockchain infrastructure protocols for the most part, like Zilliqa, Tomo Chain, and also Icon. And they've generated great returns. But what we're seeing now is the market shifting away from ICOs, and probably for good reason. So we're not focused on crypto asset investment right now. We're focused on tokenizing assets and STOs.
Sunny, STOs? Are you deploying capital there or no?
In the infrastructure around STOs. We're investors in a platform named Harbor. We're investors in Trust Token and a few others that are kind of playing around what I'm considering the financial infrastructure layer within security token offerings.
So Arianna hates stablecoins. So can you bash him for a Trust Token?
Sure. Yeah. Well, so I have some reservations around stablecoins for a few different reasons. I think from an investment perspective, I think the best suited to issue stablecoins are in many cases trusted entities. So for example, banks or some of the more notable crypto companies rather than upstart startups. From the algorithmic stablecoin perspective, I think so many of these models that work well have yet to be tested.
So she and I both hate stablecoins as investors. So what do you like?
Well, I actually do like a lot of the rest of the financial infrastructure. So for example, I really like the idea of decentralized exchanges, margin trading protocols. I think what we're going to see is kind of the recreation of some of the existing financial pieces in a way that's more peer-to-peer, and I think that's a good thing.
So I hate decentralized exchanges, not because I think that we shouldn't have them. I think as an industry
Is there anything you do like?
Yeah, that's beautiful. See, that's excellent. So I don't like decentralized exchanges because they really are unlikely to produce meaningful liquidity, and I think that the killer application for the 253 decentralized exchange projects that are currently being watched on GitHub, I think the total liquidity is going to continue to be marginal. So that's my analysis. I think people who don't understand liquidity think otherwise. But
I think liquidity right now is really low, but it's really low everywhere. And sure, if you look at volumes, decentralized exchanges are less than 1% of overall trading volumes.
0.05.
But to me, it's less than. I was correct.
Fair.
So I think that what we're going to see though is if that continues to grow at a meaningful rate, it could easily get to 5 or 10% in the next couple of years.
Yeah. So if you make a comparison to the music industry, I think the 253 decentralized exchanges are all fighting over who gets to be BitTorrent. So that's my perception.
We'll see.
I mean, I think what decentralized exchange, it'll be interesting to see how decentralized exchanges can handle security tokens. And it's going to depend on how the security token is programmed. If it's programmed in a way that the code makes the trading of the token compliant with all the secondary trading rules, potentially you could see security tokens being traded.
I think it's banana. I think I don't want to rat hole into DEX because the larger topic is we all kind of like fintech, right?
Yep.
So as far as what we like that's a vertical that's attractive to investors because for me personally, I actually understand the adoption pattern. Mm-hmm. For things like education or healthcare, who are the users? I don't understand who they are. Like fintech, financial users, I understand why they're there. So to me, getting back to what you were describing about a decentralized security token exchange, I could see a protocol chain that enables centralized exchanges to essentially share information about things like how many people have invested in a thing, right? So I think that there is a need for a inter-exchange security token protocol. But I would say this, which is that the notion that institutionals would go onto a DEX is here's the playbook for an institutional on a DEX is you honeypot a node and you basically front run whoever orders come into your exchange. No meaningful orders of size will come into the DEX because they'll just be front run. So why would you possibly deploy capital in meaningful order sizes into a DEX? It makes no sense. Anyhow.
Okay, anyway, coming back to one of the topics we were talking about, I think you did hit on a good point that I do want to dig into a little bit, which is we've talked a lot about security tokens. That's the concept of the conference that we're here talking about today. And when we talk about the quality of the assets that are being securitized and tokenized, I think that warrants a little bit of discussion. You can look at assets in real estate, for example, as you tokenize you collateralize and securitize part of the percentage of a building. That's not new. That's been done by Wall Street for a long time. Chopping up ownership and selling bits and pieces of a big famous building or a painting somewhere. This is not a novel thing on Wall Street. Tokenizing it and putting compliance into a smart contract and writing code that ensures that it's trading hands within compliance bounds, for example. Some of that stuff is more novel now. That said, if the underlying asset is garbage, the token is not going to be improving
Beautiful.
anything.
Thank you.
That's
Thank you
something
for
that the
saying
world
that.
needs to
That's
understand.
a beautiful thing to understand.
Yeah.
So to me, we initially launched this panel with this notion of winter. I think the votes are in for winter. People like this notion of winter. The question becomes, is the STO phenomenon, is that green shoots? Is that spring? Or you described it institutional-led spring rather than retail-led spring. So I guess my question, Sonny, throwing over to you.
Yeah.
Is the STO phenomenon a sign of spring for the crypto asset ecosystem? Or not?
I'm not saying that we're there yet. I'm saying that we're starting to see
green
sprouts.
shoots.
Green shoots, yeah. Largely with custody, with ETFs, proposed ETFs, hopefully coming to see the light of day, with some of the larger exchanges and wallet holders, some of the more retail-friendly brands, kind of coming into into a wider range of tokens that they're trading, et cetera, to the point of where your mom and your dad, and they're, if not them specifically, then they're the person who's managing their pension or something. Is gonna start coming into it.
So Peter's voting with his feet, which is that he's actually shifted from the ICO thesis into STO thesis. So I think your position is very clear from the position of your feet. What about you? STOs, spring, summer, winter? Indifferent?
I mean, I think we're still at the very beginning of the trend. I think one thing that I guess a bit of skepticism that I'll throw out is just the fact that while I think we're going to see a lot of things being broken up and sold in token format, and I do think that's interesting because it opens up access to liquidity and a lot of other positive things potentially. I think you kind of have to recognize though that you're not solving problems just by fractionalizing everything, or you're solving some problem but not the entire problem. So to Sunny's point, whatever the underlying thing is, like if that's not valuable, then the token's not going to be valuable either. And you are not necessarily fixing all issues in a given asset class just by breaking it up into smaller fractions.
I just want to kind of pile on and say the following, which is that it's very likely that STO will add 10 trillion USD to the total value of the crypto ball, which is currently valued at less than $500 billion USD. So, it is a very material change to the overall industry, and it does reflect potentially a significant legitimization of the space. But that being said, as early stage investors, we're all bored. Like, in other words, like what is investable? I'm not going to invest in a building. Like, that's not my business. I'm a venture investor.
Yeah, so. I think the thing that's important to remember from an investor perspective is that just because like it's a real estate asset now has a token, doesn't mean that I know anything about real estate. And I see a lot of investors who are like, oh, well now there's a token, so I'm gonna invest in art. And I'm like, you literally know nothing about art. And now just because there's a token doesn't mean that you have any way of assessing whether it's a good investment or not. Right. So that's just kind of one piece of caution that I would throw out there.
Right. Right now there's a bit of a really big gap between traditional and crypto investors. Crypto investors understand what a token is, but they don't really understand how to invest in art or real estate or startups. A power plant in Korea. But they understand tokens. But then you have traditional investors who know how to invest in all those assets, but don't really kind of are afraid of tokens.
So let's shift gears real quick. So whose fault is crypto winter? Sunny?
I think that expectations getting ahead of reality. When you hear your cab drivers giving you tips on
buy Tron.
Exactly.
Literally, it's always the worst things that they're advising to buy anyways. But
that's because they're bag holders.
I think that yes, there is the consumer exuberance getting the market caps up to 800 billion in January of this year is an example of nobody knowing where this was going to go and everyone promising their way to the moon and like not even getting an inch of the way there.
There's a phenomenon in Korea, I was just there about a week ago, called tadangi. So tadangi literally means multi-level pyramid marketing scheme. and this is being used to sell tokens in like Tupperware parties to grandmothers. I mean, it is truly like reached the epic scale of abuse and financial
I think it's
fraud.
important though to remember, I'm a big fan of Carlotta Perez's work, and she maps out in her book kind of the cycles that happen when you see a new technological revolution, and she looks at the Industrial Revolution and the Web 2.0 and Web 1.0 and all of those things. And basically what she describes is that there's an inbound excessive amount of basically financial capital that attaches itself to any given technology. And so what that does is it creates the mismatch and the expectations getting way ahead of reality. You have a crash, and then the technology actually develops to the point where you do get to the real value. So I think that we're in kind of the beginning of the second wave in which we start to actually see some of these things start to have utility and actually bring value to users, but we're still, in the first inning of that.
I think you would map it closely to something, not to be like dismissive, but the kind of Gartner hype cycle model of this kind of like trough of disillusionment and then eventual like utility of some form. But to me, the thing that's fascinating about under deliver, over promise is I think we are seeing kind of radical overcorrection, because like people are actually paying attention to like Nouriel Roubini. So like that's a clue that we're like way overcorrected, right? Because what he's saying is utter rubbish and nonsense and intellectually dishonest. So the point that I would make is that, yes, we don't have a peer-to-peer electronic cash. So Bitcoin failed to deliver on its promise. But what we do have is we do have an uncensorable store of value.
It still works. I can, in 10 minutes, send any amount of money to anyone, anywhere without needing an intermediary. That's pretty fucking great.
But that was my... I love it. Beautifully said. Beautifully said. But which is that we do have something. Wonderful. But we don't have a world computer in Ethereum, but we have a pretty freaking good vending machine for securities. So that's a last line.
I mean, Ethereum's also 3 years old. Like, I don't think you can expect to say, oh, well, where's the world computer out of the box after 5 minutes? Like, this is something that's going to take decades. And I think, like, assessing where we are now as the end state of what the technology is going to do is a recipe for not investing in anything new.
Yeah. I think, well said.
Being embarrassed.
This is great. No, that's just, you're dropping bombs. Keep going.
So when you, I'm not as good with the sound bites as you are. So when you see the CryptoKitty phenomenon, right, and you see the number of games that are going towards crypto collectibles and stuff now, the fact that people were sitting on so much digital currency without any actual networks being wildly launched to do anything with them, people started gambling. People started buying digital cats that had no real world use for them. I think that when you think of the types of users that you need to kind of be in V1, come out of trough of disillusionment and be in V2, for example, when you think fintech, drawing it back to what we all do have as our common denominator here, the folks that you know on Wall Street, some of the smartest people that don't need the pretty UI or the pretty UX, that will deal with like ugly ETH delta, you know what I mean? Like, that's the types of people that I have faith in that will be our initial go-to
crypto nerds.
Yeah, sure.
If you look at the current security token issuers out there, the projects that are in the pipeline for people like us and for other issuance platforms, it's very exciting. We're working with startups to tokenize equity. We're working with funds to tokenize their LP interests and their underlying assets. Okay, that's a little bit boring. But we're also working with an NBA player to tokenize his player contracts and his endorsements. And we've figured out a legal structure to facilitate that. We figured out a blockchain, a security token standard. So that's something that's
I think
exciting. That's big.
It's exciting, but to me, I don't know if you remember, but in the, I guess it was the 90s, David Bowie released this thing called the Bowie Bond, which was kind of a bond against his kind of securitizing his future earnings in music, which was, fintech innovation, but, it was more like a publicity stunt. So, my mood around this is how do we flip the crypto economy, right? Because at the moment, it's essentially, there's sort of 3 or 4 groups. I would say that there are pump and dump groups, there are investors, there are builders, and there are suckers. And I think at the moment,
there's
4 groups. That's good. And there's only, but the pump and dump groups are winning, right? So the question is, how do we flip the script? I
don't really think they're winning anymore. I mean, there's not a lot pumping these days. I think last year there was a lot of that. No, it's true. I mean, look at the charts. But I think a lot of that activity kind of died down at the beginning of the year, and there's a lot less of it. So I think honestly the market starts to correct itself.
Yeah.
I am definitely not the market always solves everything kind of person, but I do think that a lot of things, the market has started to rationalize. So, companies are saying, okay, we have a lockup on our tokens, investors can't get out after 2 weeks and stuff like that. And so, I think a lot of those issues are kind of fixing themselves to some extent.
Yeah, that's encouraging. So I guess what I'd love to do, unless you've got a quickie, is this whole feeling about what is it that you do like? So someone asked me that question, but I'd like to defer that to the end. So why don't we each come through here? And to me, I'd love as many specifics as possible. Like, for example, if you wanted to incubate a deal, like what would that deal look like? And the other flip side of that is what are the things that you're traumatized about that ICOs pitch you with? So what do you love and what do you hate?
This turned into a therapy session. I love it.
Yeah, that's good.
So in terms of what we love, we did incubate a company. It's called Scale Labs. It just announced its $10 million initial raise. It's focusing on the base layer of infrastructure. When I say base layer, I should actually say layer 2. It's a scaling solution that allows you to build side chains to kind of be able to run transactions that don't need to be going back to the base chain all the time. Because one of the big problems we know with Ethereum is throughput challenges, which caused gas prices to shoot through the roof in last December when we saw how high it shot up. So I think that's one example of a infrastructure, picks and shovels kind of company that worked for us. In terms of those that, we don't hate receiving any kind of pitch. We're always happy to hear anything. But I think those that have gotten a little bit tiring are when folks can't stare themselves in the mirror and answer why they need a token, and like why their core business didn't work previously and now it will magically with a token. It's kind of, you see a deer in the headlights kind of look when you bring that up, and they're like, what do you mean? There's a token. Like, but why is there a token? Because there's a token. And it's just,
Nice.
Yeah,
Nice.
so that's something we don't want to see.
11.
Yeah.
So I'm excited about the evolution of security tokens. If you think about ICOs, they
Oh, you're
were...
such a good panelist for this conference.
Oh, I'm a great panelist. If you think about ICOs, they were actually mostly based in Asia. Security tokens, they're mostly going to be in the US because everyone wants to access US capital markets. And people like us are perfectly situated to capture that. Whereas, ICOs, it was mostly Asia-based. So I'm very excited about that.
Yeah, that's great.
I'm excited about truly private money. I think privacy coins are still extremely underrated.
I hate those. Sorry.
Well, got to keep it interesting. Yeah, no, I think the idea of having, a truly private way of transacting is pretty powerful. And I think we take that freedom for granted in the US because generally speaking, you're not going to end up in jail for transacting unless you're doing something illicit, which is not the case in a lot of the rest of the world. And what am I sick of hearing? I'm sick of hearing businesses where the token is presented as the solution or putting it on the blockchain as the solution. You can't just say, oh, we're going to put Uber on the blockchain or Airbnb on the blockchain and expect it to magically work.
I heard one of those
Most
today.
of those businesses are regulatory problems, they're compliance problems, their trust, their brand, they're all these other things. And so blockchain doesn't magically solve all of that.
Yep.
Yeah, so I guess what I'm going to do is flip the script a little bit and go after VCs. So VCs also ask dumb questions. So if a VC asks you a dumb question, you can jump up in your chair and say, Miko said that was a dumb question. And I'm sure you'll get the money.
From Miko.
The case study that I like is if you take a look at Binance Coin. So VCs will ask you, hey, is your thing decentralized? Does it have a protocol? Like, is it written in Solidity? Is it a DApp? Like, they'll ask you all these questions. They'll ask you questions, otherwise it shouldn't be a coin. That's the thesis, right? And then they'll also ask you things like, can't you just use Ether? And my case study to refute all of those is Binance Coin, right? Which is Binance Coin's utterly centralized. There's no DApp at all. There's no protocol at all. I mean, they're building a DEX, but that's kind of not that material to the fact that it's a number 16 coin on CoinMarketCap. It's completely centralized. It's an app. It's not a DApp. And yet, it is a functioning crypto economy. So to me, the question that's salient is the purpose of your token to establish a functioning crypto economy, or is it not? And to me, that's the salient question, rather than any of those other questions. I just wanted to kind of flip the script and go that way. In terms of like things that I
love Binance and everything, but Binance Coin is obviously a security.
Say?
Binance Coin is a security.
Is a security.
I mean, there's no way around the fact that
it's
totally
security
agree. Under
totally
US
agree.
laws.
Totally
and
agree.
The fact that they started in China, they moved to Japan, now they're in Malta.
Yeah, they're legally evasive. They're domicile evasive.
There's a reason they keep switching their
I
or
totally agree.
jurisdiction.
I totally agree. Domicile evasive. On the Japan topic, I did want to address the privacy coin construct because the Japan FSA went negative on privacy coins, and they actually forced privacy coins off of Japanese exchanges because they were used in exit scams from the CoinCheck hack and from Mt. Gox and from all the major exchange hacks. So the privacy coins are being used as money laundering routers for exchange
So are
hackers.
banks.
I understand that, but what I'm saying is from an investor perspective, I don't want the results of delisting to cause liquidity crunches for my investments and having them go to zero.
Sure, I think nobody would argue, including me, that there's not significant regulatory risk in investing in privacy coins, but there's always going to be some kind of risk. As an investor, your job is to like weigh those risks, not necessarily avoid them entirely, is my lens. And I mean, historically, if you look at things that are banned, they often end up doing very well. You know,
Nice.
and I think privacy coins, you know, may be one of those things down the road.
Yeah, that's interesting. It's good. I think we could have an entire debate on privacy coins. So I guess from my vantage point, I guess I have to stop with something that I think I like. So from my perspective, the thing that I really like is the magic word, which I think is revenue. I like companies that have products. I like things that have revenue because to me, it's a great antidote for the culture that we're in today, which is white paper plus hype plus oligarch yacht equals ICO, right? So I feel like we need to reverse that pattern and we need to actually deliver value. And I feel like, you know, the reason why I think we're overcorrected is we don't have a world computer, as we said, but we do have a vending machine for securities that's vended $20 billion of securities, so that's an effective vending machine. And we do have a censorship-resistant store of value in Bitcoin that's utterly functional and has no trusted third-party intermediary. So I think we're delivering good things. So with respect to kind of getting out of this winter scenario, you know, I think we are making those incremental steps. And I do think that we all agree that STO is a part of that equation. So I think we're down to the last 20 seconds. Anyone have a soundbite to throw in, or should we just call it?
They've all been said.
Excellent. Well, big hand for this amazing panel.
All right.
Great. Okay, thank you very much.